Well, hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature. Looking at the last print of 11:05 on the September contract, 2010. This is Wednesday, the 15th of June, and looking at kind of a tired market. We had a beautiful up day yesterday, being Tuesday. What an amazing session. Look at all this green, accelerating green, 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 green. Green, of course, means bullish. These are our intraday dynamics, our proprietary indicators that we use to kind of gauge where the market is likely to go. And certainly, we did have this gap higher above the trend on yesterday, Tuesday, the early session, and just came down, walked along the trend a little bit. But as you can see, where's the market going to go? Was it going to break below the trend and move lower? Well, definitely not, considering that we were full all-out bullish on the market. So you had price technicals bullish, you had the trend following bullish, and you had every indicator that we follow bullish on our intraday dynamics. So that suggested the market was likely to go higher, and it certainly did. We'll say a low of 1090 or so, all the way up to around 1110. So nice 20-point move in the E-mini S&P 500 futures contract. And most of our systems, if not all, were able to catch, beautifully so, almost the whole of the move yesterday. And we'll look at that in a second. As you saw there a second ago, MapDT version 4.0 HR continues to outperform, to be the standout portfolio, up $7,500 yesterday was the MapDT version 4.0 HR, $7,500 as you just saw. We're going to talk about that a little bit later. Right now the market, as we mentioned, looks a little bit tired. Why do we say that? Well, we had a gap lower. We've simply filled the gap. We're now below the trend. Why do we expect this to be a selling opportunity around 1108, 11.6 to 11.8? Well, that's because look at this bearishness. We have bearish, 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 bearish. We actually opened below the trend, so it's arguable bearish. They filled the gap. Now we're below the trend. We have full bearish bias. So today's trade of the day will certainly be any sell from 1104 to 1108 at this point. Go ahead and stop out around 1112. 1112.50 will be the call. So go ahead and sell when you get the video on the ES. For informational purposes, this trading is, of course. And go ahead and target as much as you want to. We'd target probably around 1092 to 1094, maybe 1095. It depends on where you get in. If you got in right now at 1105, you'd probably want to target around 1095. 75 would be a good target if you can get in 1104.75. Having said that, although everything looks bullish, things can certainly change midday. So around midday, should we get a break above 1111, 1112, then you certainly want to go long. But right now, neutrality from 1108, we'll call it to 1112. Definitely want to be selling below 1108. Have a sell side bias on the market. As you can see, we have plenty of. Here's a perfect example: full all-out bullishness. Bullish, 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 bullish. This was, of course, on the 14th, and had the gap higher. Went on to retest, of course, at the major round, significant round level of the 1100 mark on the market. But as you can see, full all-out bullishness was the case, but the market just wasn't. The technicians took over and sold off at 1100 level, and we actually got a close at 1086. So that was a purely technical sell-off and given 1100 level, because as you can see, everything was bullish. Went right back to the bullish state yesterday and corrected those bears who errantly were selling the market. Right now, we've gotten a move higher, and we're going to go ahead and switch over to the daily chart to see. We've actually gotten higher. There's the EVO. Look at that beautiful EVO trading ES. And you can either trade this version of the EVO or trailing version. It's up to you, depending on your risk. But look at this, look at these beautiful trades, long there, beautiful, catching the whole of these moves, not getting whipped out there. Amazing, not staying out of the space during this choppy day. Another long, and another beautiful long yesterday for the Evo. Look at that, catching almost all the move, 1095 to 1110 on the Evo right there. And as you can see, we're moving down even lower. Probably going to quickly retest 1100 and see how the market handles that area around there. But look at this ES Day Trader 1.0, also just catching beautiful trades. Nice, beautiful long setup there, and as you can see, nice trades there. But we're going to look at the daily chart, I believe. Nope. Yeah, we're going to look at the daily chart. And this is daily chart of the S&P 500 cash market. And as mentioned, we did bust through not only the 1100 level, but we busted through, as you can see, based on our indicators that suggested that the sell-off late Monday was errant and purely technical in nature. But we did bust through, nevertheless, and we've retested our key measure of trend following support resistance, 1120. Didn't quite get there. We'll call today's high 1114, yesterday's high 1115.50. Didn't quite get there. It's 1119.50. Sellers are coming in a little bit early, recognizing that's kind of our key measure. We mentioned actually even though we had moved to short-term bullish and certainly above 1100 was technically bullish from many vantage points. We, given the proximity of our key measure of trend right here in blue, key measure of trend following support resistance, mentioned that we were going to hold neutral. The market could blast up there, but definitely above 1120, we'll start to get encouraged on the bullish side. We actually haven't moved to neutral on our bearish side. We may have some more to go on the downside. We'll see how the market trades around 1080 or 1100 on a retest, retracement of this move from 1040 essentially to almost 1120, so 80 points quickly in the market that we've seen. So we're going to retest that and see, kind of gauge where the market is. From a momentum perspective, we are short-term bullish still, and as you can see, the market certainly played out. Take your short profits came right at 1103.06. So we're kind of around that level. We did get some more downside. A double bottom could have kind of a messy inverted head and shoulders formation here, but nevertheless, we're going to remain bearish, certainly below 1080. Go all out bearish. 1080 to 1120 is definitely just pretty much a neutral state, and you want to be keeping it close to the vest and day trading, particularly so. And how have our day traders been doing? Well, look at that. We mentioned $7,500, another $7,500 in another $7,500. We're going to go ahead and see if we can't. Okay, there we go. So this is we went ahead and just plotted how the MAPDT, we've been talking about this portfolio for I don't know how long. Of course, it's one of our most popular portfolios. $25,000 portfolio. There is a smaller version, a $15,000 MAPDT-S version 4.0 HR. But as you can see, the portfolio has just been outstanding and has gained $24,000 just over the last 12 trading days. If you look over the last 12 trading days, how some of these key performers have done, you can see another $7,500 in graphical representation. There you have it, starting just 12 days ago, the 27th of May. This is the profit that the portfolio has generated each day. This is the equity curve, essentially, going up to $25,000 in pure profit, starting at zero profit 12 days ago, $25,000 in profit, and just really handling this market amazingly well. Certainly one of our best portfolios. You can find out all about it going to the website. Here's our other portfolios. Matt Black gained $15,000 yesterday. The standout, though, was the TTTHR gained 37% yesterday, $3,600 on $3,700 on a $10,000 account. And actually, over the last 4 days, the DT version 4.0 HR has gained 43%, but the TTTHR triple threat trader high risk high return is actually outperforming, besting everyone with a gain of 61% in just the last 4 days. There you see it. The performances of our primary portfolios just in the last 4 days, but certainly the MAPDT version 4.0 HR has been outstanding, and you can actually save 20% if you're interested in subscribing to the MAPDT version 4.0 HR. You just go to the website, click on MAPDT version 4.0 HR, any of our other portfolios. You can save 20%. All you have to do is enter promo code video right there in promo code, and instead of $7,500, you get, we'll just go ahead and delete those. $2,000 instead of $2,500. Purchase many units as you'd like. Go to the website, chat with us live, to chat with the support team live, or shoot us an email to admin@MiniAnalyst.com. And hope you enjoyed it, and we'll see you next time.